Alright, so welcome back to the second half of chapter 14. Just a couple of quick things before we start on this problem. So before when I was making this cheat sheet, just keep in mind that it's not entirely accurate. It's kind of kicking myself after making the first part. So operating activities, or just liabilities here, it's not entirely accurate. So if you're paying an accounts payable, it's actually an operating activity because the liabilities thing here, it's kind of limited to notes payable, because an accounts payable is just an agreement with a supplier to pay on a later date. There's no interest attached. It's still a liability. It's just an operating activity. So keep that one difference in mind. And I also kind of forgot to go over the whole purpose of the statement of cash flows. And the first, which may seem kind of obvious, the first purpose is to see how much, to see if the company can generate cash. And obviously, in this case, they didn't. So it also shows maybe why they're not. Another kind of word for this is financial flexibility. I'm just going to write flex, because why not? So it kind of just shows the company's capacity to borrow, issue equity, and sell non-operating assets. And the other thing that the statement of cash flow shows is the effectiveness of a company's cash management. I'm not going to write all. So the effectiveness of a company's cash management. All right, CM. And so you might be thinking, okay, maybe that's just saying, okay, how much cash can they generate? That's not necessarily true, because in a company you don't really want to have a lot of cash sitting around, because if you just have all your cash sitting in your checking account, you're not going to make enough interest on it, and inflation is just going to eat it up. So you really want to use your cash to put into investing activities, for example, to purchase new stuff and reinvest it in the company. And yeah, so you really just want to do stuff with your cash, and you want to make sure that you have it and you're managing it correctly. And solvency is kind of shown too. So solvency, that's your ability to meet debts as they come due. So obviously having cash on hand to pay off those debts is important. All right, so let's go. After that, let's head back to the question I said that we were going to talk about first. So when you're doing these, again, just do what we did here and start by labeling them and saying if they're increasing or decreasing by the given amount. And also I would just keep a little chart going as you're going through the problems. So the first one, purchase of inventory. It's obviously an operating activity. Purchase is going down. Cash proceeds from a loan, so that's financing, and it's a plus. Cash paid for interest, operating, because remember interest expense, down. Cash collected from sales, operating, plus. New stock issued, financing, plus. Salaries paid to employees, operating, minus. And purchase of new delivery van, investing, minus. So then you just kind of put the amounts in here, or I guess you can be doing that while you're classifying the stuff too, whatever works. And so I'm just gonna, hopefully this makes sense. I'm just filling out what I did and putting in the corresponding amounts. This is a comma. Yeah, this is 25,000. So then you're just gonna total those. You're gonna do this one first because it's the easiest. Then we got 32,000. And over here, 16,500. And yep, so net cash from operating activities is going down. Investing activities is going down too. Financing activities is going up. So those questions hopefully won't give you too much trouble in the exam now. And on the exam there'll be multiple choice, but I didn't want to give you multiple choice because I wanted to toughen you guys up a little bit. Alright, so let's talk about the indirect versus the direct method really quickly. So the direct method, so keep in mind first of all that the only difference is in the operating section. So the direct method is kind of like what we've been doing all along, where you just kind of like look at the cash flows and you just kind of label them as operating. But in the indirect method, what we do is we start with net income, and then we like work our way to uh, the like cash flow from operating activities. And to do that, we have to adjust it for differences between cash flows and accruals. So like you need to like look at the balance sheet and see like a change. I'm just gonna use delta because I'm sick of writing. So like a change in current assets and change in current liabilities. And there's more too. She didn't have a problem dealing with the indirect method in her packet, so I'm not actually gonna have a problem on here. If I show up to class on Thursday and she's doing some indirect method problems, I'll make another video just for the indirect method because it's kind of difficult. But I'm not gonna actually do a problem right now. It's kind of weird. So like the change in current assets, so like if there's a positive change, it's actually going to decrease on your way from net income. Like you decrease it from net income to get the cash from operating activities. It's kind of weird. And then like a change in current liabilities, if the current liabilities went up, you're gonna increase it. You're gonna add it to net income, like the change in current liabilities. So it's kind of weird. So let's talk about earnings per share really quickly. Earnings per share again is going to be net income divided by shares outstanding. Remember from chapter 12 that it's outstanding. So if we had like 15,000 shares outstanding and 200 or 2,000 in treasury or something, keep in mind that we'd have 17,000 issued, but we'd only have 15,000 outstanding, which means in the hands of the shareholder. So the 15,000 is the number that we would use in the denominator. And then numerator is just net income, so it's pretty simple. Last thing you should know about earnings per share is that earnings per share is required to show up on every single company's income statement. And yeah, if you know those things, you should be good. Obviously, review your chapter 14 packet for like some of the nitty gritty details that won't be in questions. But for like question stuff for chapter 14, it's probably just going to be stuff like this where you have to label it, or it's going to be stuff from the indirect method, which I'll make another separate video for if I feel necessary because it's kind of weird. So yeah, thanks for watching. As soon as I figure out how to stop it.